Hi. Now, welcome back to I think the third episode or two. Yeah. So now we are going to look at ways to what invest. So we are assuming that now we have your income, right? We have apportioned some for budgeting. You have done your budgeting, your needs and your needs for that matter, and then we have some apportion for your savings, and then for investment. So investment, we gave you introduction, a glimpse of that. Now let's look at how practical we can actually do this. So ways of what? Investing. Now, this brings us to the introduction of what? The financial markets, right? So one is what? Stocks. This is very common, yet people do not know how this actually works. They don't know much about stocks. So we have individual stocks. Now, it means that buying shares of companies we believe will grow and increase in value over time, right? So there are companies, this is actually seen in, I think, in strong economies in USA, in Germany, in other countries that you can think of, they are doing well. So they have stocks. And then it means that the companies in them that are doing well. So these companies that are doing well are listed on a stock exchange, right? So their performances there would determine if you have gone into it or if you were a shareholder. So if the companies are doing well, then your share of that would also increase proportionally. So this is just an introduction. If you want to know more about it, be watching or checking from this page, this channel, and then you get more understanding of this. This is just introduction. So you buy shares of them, and then if they are doing well, your return will also increase. Like we said, if you invest the duration, how long the duration or how short, yes, it depends on how much you're going to get. So that is it. Then we have dividend stocks. So investing in companies that pay dividends can provide a regular income stream. So that is it. Some companies do also pay dividends. So this is another type of what stock investment. Then we have bonds. So the bonds are government bonds. You can consider the USA Treasury bills or bonds for that matter. And this is what with a low risk investment. We have type of what investment of bonds. We have risk on and then risk off. If you want to know more about it, check in this video description or this page, right? Then we have corporate bonds. So these bonds tend to offer higher yields than government bonds, but come with more risk. You understand? So that is just you have to do your own due diligence, right? Do your own inquiries about this. Then third, we have mutual funds and then ETFs. So index funds. These track a specific index like the S&P 500, right? Offering a broad market exposure. We have the sector funds, focuses on specific sectors such as technology, healthcare, and then energy. You can also go into what? Real estate. I think this is more common. Yeah. So we have, under this type, I think we have two. We have rental properties, right? So we buying property to rent out can provide a steady income. This is one of the opportunities that is being what common. It's actually good. Investors are actually getting on board. They are doing this, right? So you buy a house, you build a house, you have a property, and then you rent it out for some time, right? People build house, and then a new house. So instead of them going to occupy the first 2 years, they rent it out, right? To get profit on that, or to actually get the money that they invested into that house. Then after they go and live in. So you see how profitable this is. They can actually build houses and then be renting them out for that purpose. You understand? So that is it. Then we have the second one, the real estate investment trust, right? This allows you to invest in real estate without directly owning property. This is actually done online. Some companies do it. The hotels, 5-star hotels, they do that, right? So invest in them without actually owning the building or the house. It's not a house. The first one is your own house and then you rented it out, right? That is it. But the second one is not your house. is someone's property, a friend's property that you are investing in some of the rooms. So that particular room, that if they were rented or maybe booked, then we have a share on that room or property. So you understand? Then we have retirement accounts. The retirement accounts, you have two types. I think this is USA based. So I'll just give you an idea of that. We have 401k and then 403. So employee sponsored, retirement plans often come with matching contributions. Individual retirement accounts, IRAs, traditional or what that, you understand? Then, so let's have a brief understanding of, I think, yeah. So these are types of retirement savings plans offered by employers in the UK, especially. Now, both plans allow employees to save and invest a portion of their paycheck before taxes are taken out. So this is a special treatment for the pensioners, right? So when you go on a pension, the money that they pay you, right? So you have the option or you have the liberty, the right to invest a portion of it before the government actually takes tax from this portion of the money. You understand? It's a good thing. I think in the US, I don't know if it is done in any of the developing countries. Then you can go into what precious metal. We have gold and silver. Investing in physical metals or ETFs that track their prices can be a hedge against inflation, right? So we have risk on and a risk off types of what investment or assets. And then precious gold, especially gold, is one part of it. It's a risk of what assets. If you want to know more about it in this channel, you have it. Now, one important thing, one thing that I'm more interested in is the what cryptocurrencies, right? So I will also do videos on this. I think shortly, just in the next day, I'll be doing videos on this. Give me what crypto mining, what opportunities, great gigs, right? If you follow this channel, and then in our Telegram page, I'll put the links, all of them. I will explain. I'll guide you throughout for free. Just a matter of liking, subscribing, and then following some instructions. That is it. With ease, you are not paying anything, free. We call them airdrop or crypto mining. That is it. But you can actually, instead of mining, you can actually buy with your money and then wait for over time for these currencies. In fact, yes, cryptocurrencies asset to actually rise or be on a bull run, and then you can what benefit from them, right? So that's in short. We have the Bitcoin is very common, popular. Ethereum, we have the altcoins. Digital currencies can be highly volatile, but offer potential for high return. They are very volatile, so you have to be careful. You have to be very patient, right? If you are someone who do not your risk tolerance is not in check, don't venture into cryptocurrencies. They are very volatile. You buy today, tomorrow it has actually dipped to the extent that you have what heart attack. If you're not that kind of person, please stay clear. Now, 8 savings accounts and then CDs. Yeah. So high yield savings accounts offer high interest rate than traditional savings account. I told you this earlier. There are different types of them. So the higher the period, the higher your return, right? And then we have the CDs there. Now, we have peer-to-peer lending, right? In French. So platform now lend money to individuals or small businesses through online platforms and earn interest. This sounds good, at the same time sounds very risky. You should only do this with the people that you believe you trust, with due diligence. Don't just go and give your money to people you don't know. So we do this. So typical example, a practical example is when a young person or a young company start to come up, sometimes they don't have the capital to what, stay them afloat. So they will need individual monies. It's not like the shareholding or the stock. This is the traditional way. I'm talking about traditional way. We are not talking about a shareholding like in the companies, but this is a traditional way that we do. So if someone is starting a new business, the person is clever, they have the business proposal or model is very what good. Yet they do not have the capital. You can actually sacrifice, invest in these things, have a MOU contract drawn out, and then you can benefit from this. This is actually a good thing because there are a lot of people with money, but they don't know how to invest this money. Trust me, I know what I'm talking about. People have money, yet they don't know how to invest. They don't know have the knowledge called financial literacy. That's the problem that we are facing now. People have money, but they do not know how to invest. So if you have this financial literacy, this knowledge, it's going to help you in the long run, get people on board, and then benefit from it. It's very good. So you have to bear in mind and then follow this. People have the knowledge. People are very wise. They have the plan. They are very adept, very intelligent. You see, they have the future, they have the mission, they have the purpose, they have the focus. Yet they don't have the capital. And there are some other types of people who have the money, yet they don't know how to invest this money. So there are two types of what people. So we help one another. So that is it. You have to do this on your own. Now, 10, business investment. Like I said, yeah, startup. So startup investing in the new business can yield high returns if they succeed. So you yourself, you can start doing your own entrepreneurship. It's a good thing. Start your own thing. Don't wait because you went to school to learn let's say accountant or accounting. And because you came out from school and then you do not have a job, you are waiting till we get an office job or get employed by another firm. So for 10 years, if you are not employed, you are going to sit home. People do this. That's the problem. When I speak about this and I speak passionately about it, sometimes it looks like you are not serious, right? You have the knowledge, you have the skills, you have the health. What are you waiting for? Do something now. Look in your environment. Look in your house where you stay. In fact, listen to people. When you go to the social media platform, in fact, there are different or many avenues that you can actually start doing business on your own. It doesn't have to be great from the beginning. Start small, and then you make it. Trust me. That is it. So don't wait. Do something now. Do it now. Get something. Don't go to the social media, just be watching videos, funny comedy videos, and come down to sit down and cry. When you are watching them, in fact, be very, very, very inclined. That is it. So education and skills development. Now, of course, you can do some courses and certification to boost your level of gaining employment. That is good. Then we have professional development. You understand, gaining new skills can open up higher paying job opportunities, right? So sometimes people learn, get to one level of education, they don't want to continue again. Even if they have the means, they are not doing it. At the same time, they are not trying to do any vocational thing. How can you be doing this? Just waiting and applying your emails, sending emails, and that. Please, my guy, it's our time you did something for yourself. Stand up, get out of your comfort zone. That is it. So thank you very much. We end here in this episode. And then in the last episode, I'll introduce you to how to actually start making money, saving money for yourself. The practical aspect, the juicy aspect of this episode or say video series. So stay tuned.